Alright, hi, this is Dylan. Welcome to my daily trading analysis video. Today is a Wednesday, 3rd of December. So let us take a look first at the euro against the US dollar. This is the the 4-hourly chart, and of course, what we are seeing is that there's a falling trend line, right, as mentioned yesterday. So price has gotten resisted, and it continues to fall. Right now it's about to touch the bottom. Alright, so just take note that if you have entered this trade, it has yet to really touch. So I do still expect price to fall further. If I zoom into a 1-hourly chart, alright, yes, there's some exhaustion and stuff like that, but we do see that the possibility of it falling further is still pretty high. Alright, so just wait for price to touch the previous low at 1.2361, and decide whether you want to take partial profits or you want to take this trade out. Alright, so that's for the euro against the US dollar. Next we have the New Zealand dollar against the US dollar. Alright, back to the 4-hourly chart. Just want to replot the falling trend channel. Alright, the thing about drawing trend line and falling trend channel is to connect as many points as possible. So in this way, after reported, it does connect more. Right, so we do see that price has currently touches the bottom of the falling trend channel. It seems like it's about to rebound. Alright, there's a very strong one, but if we zoom into 15 minutes, we do see that price is still resisted by the 55 moving average. And if I were to plot a trend line within this channel itself, alright, this is not important. So just to take note, if this is a 15-minute time 15-minute chart, if price would be able to close above the 55 moving average, then you may want to consider partial taking profit. Alright, if not, I am still expecting price to fall further, at least till 0.7725, because that is the level where inverse head and shoulder may form. Alright, but if you look at the whole chart pattern itself, New Zealand dollar against US dollar is very wavy. So at this point right now, we can still expect price to go to swing all the way up, touches the top again, or somewhere close to the top, and then you fall again to this support level 0.7725. So once again, just to take note, 15-minute charts, if price were to be able to close above 55 moving average, then you may want to consider either taking partial or taking out this trade itself. Okay, so that's for New Zealand dollar against the US dollar. Next we have the pound against the US dollar. Alright, so a quick recap is that there's a falling trend channel over here, and price has touches the bottom of the falling trend channel, but it has yet to reach the top of the trend channel again. So I'm still expecting price may price may still appreciate, okay, to the top over here, okay, and then when I see there's a trade setup, then I will go for a short. Alright, so as I mentioned, using a Fibonacci retracement from the top over here to the bottom. Alright, this level over here is 38.2%. Just nice, it coincides with the top of the falling trend channel. At the same time, I believe by the time it reaches here, the 200 moving averages should be somewhere in the same area, and therefore if there is a setup, a reversal confirmation, then that could be the price to short. Plus it's also one of the previous high over here. Alright, so just waiting for price to touch there. Of course, if price came down all the way, touches the previous low, that gives an intraday to go for a long as well. But just bear in mind that it's going against the overall trend. but still, if the risk to reward makes sense, then it is still agreeable to certain extent. Right, next is the dollar against the Japanese yen. Right, so there was a rising trend line. Right, somewhere from over here, starting from here. Right, yeah, appreciates. So yesterday I did mention about this area, so it did appreciate. Well, this candle is not really nice, but after which it did form a very strong confirmation, and it starts to appreciate, and it has also broken new high. Right, it has reached 119 at this point of time, and of course we are still expecting price to appreciate further, especially once it touches 120.09, because that is one of the final exhaustion level, okay, measured by the Fibonacci expansion. So just take note when price touches this level, and if you want to capture this trade, it's gonna be pretty hard. Right now may be the time. Alright, this is a 15-minute chart. Alright, it's just nice, supported at by a rising trend line over here. So if price were to be able to close at 119.26, that could be a intraday long for yourself. Right, so make the decision yourself. This could be a intraday trade to go for a long. So that is for the dollar against the yen. If not, we're gonna wait for price to touch all the way at 120. Alright, next, just want to touch on another two currency pair. Firstly, we have the Australian dollar against the New Zealand dollar. This is a day chart, and what we are seeing is that there is a rising trend line over here, a very, very strong support for the price as a trend line. And right now we are seeing the price has touches this. 2 days ago it touches this level. Yesterday it appreciated, and this morning it fell again. I believe is because of Australia's GDP, which is a disappointing data, lower than forecast, and that's why it fall. But if you're gonna look at the technical aspects, right now, this is a strong support. So just take note what will happen next, and see if there's a setup for this to long Australia against the New Zealand dollar. But still, fundamentally speaking, the Australian economy is definitely weak, slightly weaker than the New Zealand. And there is a possibility that Australia might start to look at cutting interest rates to boost their domestic growth, because as you can see, the data for the GDP is pretty disappointing, and it has been pretty long. It has been happening for the past few months. Alright, so the central bank may be very, very particular on the GDP, and may take certain measures such as cutting interest rates to boost this area, or rather the inflation. Alright, so yep, that's for the Australia against the New Zealand dollar. And next for the dollar, next we have the euro against the Australia dollar. This is a very interesting one. So if we look at the weekly chart itself, we can see that there is a probable head and shoulder that's forming right here, and we do see the price has yet to reach the level of the first shoulder. So back into the day chart is that with a Fibonacci retracement all the way to the bottom, okay, the level at 1.5055, okay, is the retracement level of 61.8%. And for some other reasons, with Fibonacci expansion itself, it coincides with the retracement level of 61.8% as a final exhaustion level, which also means that this level itself is a pretty strong one if you are looking for the short. And of course, at this level, it is also very close to the first. It is also very close to the first shoulder of this of a probable head and shoulder. And we are expecting price to reach this region and before it really starts to fall. Okay, and so if you look at the day one chart, we do see that there is a rising trend, a probable rising trend that's forming. We can expect the price touches the top over here. And if you zoom into the 4-hourly chart, or rather the 1-hourly chart, because there is still quite a lot of profit to be made if we are able to capture the retracement. Therefore, if you zoom in the 1-hourly chart, we do see that there's a minor rising trend channel that's forming over here. And if you want to capture this trade in time, then wait for price to touch the bottom of this minor rising trend channel and see if there's a setup for you to go for a long. And if yes, this could be a valid one to go for a long and trade this whole retracement itself. It is as high as over 200 pips. Alright, so still expecting price to appreciate further, especially where Australian dollar is weakening at this point of time. Or if not, you will just have to wait till it reaches the price of 150, somewhere 150 flat, then start to take a look if there's certain setup to go for a short opportunity, because this is a pretty huge one. Just talking about going all the way down to the neckline is over 1000 pips. Okay, so that is all for today. Thank you for watching, and I'll see you again.